All right, what's up, Facebook Landia? This is Rich Hayden with Home First Mortgage. I hope everybody's doing well. As always, I want to start by reminding everyone to say "Go Big Red" to start your day. It will make you feel better about yourself if, in fact, you cheer for the Nebraska Cornhuskers at every turn. I say that knowing full well that I have a Spartan on the call. That's right, right?
Right.
Our good friend John Tallinger from Michigan, went to Michigan State, and I'll root for Sparty for sure. Anytime, especially they're playing UM. So, but we wanted to spend a couple minutes today. As a lot of you in the DC area know, I'm a mortgage lender. We've got our friend Matt Leiva with ML Properties, Keller Williams, Chantilly Ventures in the DC metro area also, and hopefully we're getting some people out across our respective circles. And we've invited John Tallinger with Class Valuations, the Chief Growth Officer, to share a little bit about, what, the generally speaking, just kind of what is appraisal, why does it matter to you? But bigger picture, just because the world is in a funky spot right now, right? And in our real estate spheres, the best thing we can do is talk logically, talk coherently, and have candid conversations about what's going on the street, as opposed to hyperbole. And you see something on Facebook, and this loan officer, that realtor, that loan officer posts something, said, "Oh my God, we don't have to do appraisals. I can set my own value now, and the appraiser's just going to press a button and it's good, right? I can still close my loan." Well, no. So we really wanted to have somebody who knows what the hell's going on, that being John, and engage in conversation and try to figure out, what concerns do you collectively have out there about this, and then how can we, kind of address that in a coherent way. Does that sound good to you guys?
Yeah, fantastic.
Absolutely.
Yeah. But John, why don't you kick off? Tell us a little bit about yourself, and for those who don't know you, which shouldn't be that many people. I mean, my God, you're world famous. And just share a little bit.
Yeah. So thank you so much for having me. Really, really appreciate it. Hopefully everyone is enjoying time with their families. We're getting to know our families really well this week, last week, and hopefully we'll get back to what the new normal is somewhat soon. But so I am a real estate appraiser by trade after Michigan State, and even really before Michigan State, I started the process of becoming a real estate appraiser when I was a senior in high school. And so after college, I appraised houses in my own company about 7 or 8 years. And then 2009, after the housing crisis, I was the first employee to help launch what was then called Class Appraisal. And about 2 years ago, we changed the name to Class Valuation. Nothing really shifted that much, but you guys will start to see, and maybe you're starting to see it, HELOCs, things like that. There are some valuation products now that are not technically appraisals. So it's just more so to be in line with where the industry is headed. But so we've grown quite a bit. We've been in business since 2009. We are probably one of the top 3 or 5 appraisal management companies in the country. And I've kind of worn every hat there to some extent. I'm one of the owners. At one point, I was the chief appraiser. Right now, in where I've really found my home is on the relationship side of the business. So we don't work directly with the borrowers very often. We don't work directly with the agents very often. We are essentially the go-between between the lender, whether it's a bank, a credit union, a broker, a non-bank lender. We are the sort of the firewall between the person who's originating the loan and the appraiser. So, and the part of the reason that you guys probably know some of this, but the reason that we came into existence in the first place as appraisal management companies was that's where some of the fraud that happened back in 2007, 2008 came from appraisers getting pressured by or working with loan officers to kind of hit values where they needed to be, and it artificially inflated some of the housing market. So we don't we do about 30 to 40,000 appraisals a month nationwide. So on a given day, we get 1,500 to 2,000, 2,500 appraisals. So there's a good chance that the agents, some of you that are on the call, there's a good chance that you've certainly probably interacted with appraisers that we send out there. And our role in the process, we know that, in the mortgage process, whether it's for a purchase or for a refinance, we know that we're just one piece of the puzzle, but we all know that the appraisal can be a pretty important piece of the puzzle. So our goal is to make sure that our clients are happy, that we're giving good service, that we're utilizing the best independently contracted appraisers in each individual market. So I'm looking forward to answering some questions about what we do, where we are in the process, and maybe give any guidance possible on how we can help out, or best practices, things like that. And also looking forward to learning a bit myself today.
Sure thing. Matt, you got any questions to start off? I've got a list of things, but I also, I talked to these guys. I mean, I actually remember back in, 07, 08, 09, when John's company was Class Appraisals, and I was working with a large national wholesaler called United Wholesale Mortgage. At that point, was not very large, and we were starting to do work through AMCs. And Class was one of their first ones, and it was just, I started working unknowingly with John way back then, and I probably have emails from 2008 that I could point to where, I was trying to understand this whole process of having to go through a clearinghouse as opposed to the person down the street. But, Matt, from your perspective as an agent on the ground out there, I mean, you and I work together a fair amount, not exclusively with one another. You've got a number of other partners as well, and everybody's process is a little bit different. But from your perspective, what kind of questions do you have just about process? And I want to jump into, the obvious stuff about what's going on right now, because that's, meat and potatoes things. But, even though a lot of these rules have been in place for a long time, from your perspective, what kind of questions do you have for John?
Sure. So I'm Matt Leiva from the Northern Virginia market with Keller Williams Realty, part of the Keller Williams Luxury brand as well. And we run a fairly well-producing team in this area. And no, so really, in all honesty, my interest is really to hear John talk a bit, and I've invited some agent friends of mine to kind of follow along. And we're so new in this that I don't think we've seen a whole lot of changes yet, right? Just in kind of today business, we're still, I would say, lagging just a bit behind with what's coming. But I think I'd really like to just hear kind of what changes you see coming and what we can expect as agents going into offer situations. We're still a very aggressive market here in Northern Virginia. So, a lot of times we're trying to shorten appraisal contingencies, shorten financing contingencies. And obviously with what we're looking at, my guess is that could be difficult, right? To use those as bargaining chips like we have. So no, I'll let you guys take it from here.
Sorry. $3. Is you guys going downstairs, honey?
That's awesome, dude. I love it.
The joys of the home office.
Come here real quick. You say hi to the people, then you can go downstairs. And then you leave Daddy alone for a little bit.
Hi, people.
Hey, how are you?
Hi, Izzy. Daddy's working today. I'm getting used to this work at home thing. So say hi. Say bye-bye.
Hi, bye-bye.
Okay, go downstairs and see mommy, okay? I love you.
Bye.
3 girls, 9, 6, and 3. So got our hands full.
I've got 2. So
yeah, you know the feeling. So
Dude, that's awesome.
Yeah, thanks, Gabe, Matt, and certainly appreciate it. So we're and so I spent 8 years in the field, working with agents all the time. Really have world of respect for what you guys do. We're seeing one of the things that we've prided ourselves on at Class, and one of the things we've really made some drastic shifts in the last 2 years is really starting to embrace technology and innovation. And I can tell you guys, you probably not telling you something you don't already know, but things are changing, and they're changing really quickly. You're starting to see, Zillow and Redfin, and you're starting to get some of these guys that used to be, just nice tools that you guys could maybe use, or maybe some people use to produce leads. Now they're becoming competition. You're starting to see companies like Quicken, Rocket Homes really become a player in the market, where they're starting to package all-inclusive services, where they're putting, where they're essentially matching from start to finish. They'll help you find a home, they'll help you finance the home, they'll help you insure the home with State Farm. There's a lot of changes that are going on. So obviously, you guys know, but being able to differentiate yourself, but also being able to be ahead of the times and be able to know that when shifts come and when innovation comes into play, that you're ahead of the game on that. We're starting at Class. We have relationships with the GSEs, Fannie Mae, Freddie Mac, who and the purchasing and securitizing, majority of the loans that are out there. And we've been working to provide solutions to help streamline the process. So what we're trying to do is an appraisal management company that does, tens of thousands of transactions every month. We are certainly not trying to take the appraiser out of the equation, but we are working to make their process easier, more streamlined, more efficient. You'll hear the word bifurcation coming. And you guys may already see some products where you have, a totally separate one appraiser who goes out and all they're doing is field inspections. They're inspecting the houses. They'll stack up 5 or 10 in a day, and they'll be working in concert with another appraiser back in the office who is only doing the desktop portion of the appraisal. Our company, we made a significant investment in a company out of Silicon Valley called Inside Maps. And you guys, Inside Maps, actually, I think has a partnership. I think they do some things with Keller Williams. Have you guys seen where they scan each individual room? They can do it with iPhone. You can do it with a beta camera. But that's the future of where things are headed. Instead of the appraiser being at the house, taking notes on a clipboard and taking, one picture of each room with, either their cell phone camera or a specific camera. Now we're capturing, and this is actually happening. We have appraisers out in the field that are doing these products now, where we're capturing 160 high resolution photos, 360 degrees of every single room in the house. And it's time stamping those. It's actually geocoding. It can actually, to the point now where it's got AI learning, where to start, you start scanning, the appraiser can scan the appliances and scan the, barcodes or find out exactly what the remaining shelf life is on those things. It also measures the house. It gives us an actual more accurate measurement of the property taken specifically from these scans than the appraisers are getting out in the field. So we're trying to put these tools and the resources in the appraiser's hands to make that process more efficient. And we're starting to see overlap where real estate agents have a lot of tools that are tools that are very, very similar to be able to differentiate you guys. And right now is a crazy time with what's going on with COVID-19. Appraisers have been we've been considered essential services. So we have the ability to still send appraisers out, which has been fortunate for us in this market to go out and do the inspections. Fannie Mae and Freddie Mac have also put some options in place for if a homeowner borrower is not comfortable having an appraiser come in their house right now, and if there are or if there's an appraiser who doesn't want to go into a house, there are some alternative options right now. There's more options for purchases than there are for refinances, but there are options for the appraiser now to do the same form, the 1004 full appraisal form, but instead of actually doing, they don't leave their office, their desk at all. They're going to be, there's new certifications for this limited form for this temporary amount of time until we get through this, where the appraiser can reach out to the real estate agent or reach out to the borrower and ask the questions that they need. So they have the information to put a good report together.
Yeah, I've got up on the screen a friend of mine from Lincoln, Nebraska, actually, Matt Kirkland, another great Husker. His name played for Husker back in the 60s. So, I'm going to throw that in any chance I get. But so Matt is actually another Matt who's a Keller Williams agent in Lincoln. He's the market center leader, actually. And he's got a question. Some appraisers aren't interested in going out, obviously, because we're all at risk or appear to be at risk right now. are we headed to 60-day closings? And there's a lot packed into that question, but this kind of goes to what you're talking about, John, in terms of, I don't want to say relaxing the rules and the guidelines, but providing different methods by which to get the work done through Fannie and Freddie, and then the tools that you guys are having, which sounds to me a whole lot like it's Matterport for an appraiser, to put it in simplified terms, right? The ability to really get all this stuff in and get these technologies in play. Do you think that we're moving toward, and there's a lot of other reasons I think we're, for a short period of time, dealing with maybe a little bit longer escrow times, closing times, but I don't think they're appraisal related necessarily. But there was another question that kind of went along with that's not asked here, which is, we go back 3 weeks ago, right? We got this crush of new refi business that lasted 8 days. And then the world fell apart. But, are you seeing on whole a reduction in the number of appraisers that you have? Take potential illness out of it, but is the field, are men and women coming into the field as professionals at this point? Is that a challenge you guys are seeing?
So great question. So really quick, the things I'm putting on the chat, I don't know if I can put them into live, but you see that I put a couple links in the private chat. I don't know if they can carry through. But
yeah, I'll put them out there.
Yeah, these are Fannie Mae and Freddie Mac's guidance that they put out, and these are probably good tools for you guys to have. I'll explain a little bit on those, but really good questions. So keep in mind the entire situation with what's going on with coronavirus. It's very fluid. So there are instances right now where appraisers are not comfortable or not willing to go into homes. There's also instances where borrowers are not willing to have appraisers come through their homes. This is just speaking for today. I was actually surprised by this, but we have 15,000 appraisal orders in our pipeline. So active orders in our pipeline right now. And as of this morning, there's only 324 of them. So a very, very small percentage, 324 of them that are on hold because there's an objection or a concern with going into the house. So those transactions right now are, for the vast majority, are still happening. It's essentially almost like business as usual. We are seeing a slight delay in turn times, not drastic, and it does depend by market. But so realize that we're kind of still dealing with a couple of weeks ago when rates were so low and things went a little haywire, where lenders took on so many applications and they essentially, most lenders went to capacity where they couldn't even take on more loans, or they were actually throttling their pricing, making their pricing worse to keep it so that they wouldn't get overloaded with too many orders. Lenders can throttle their pricing back. An AMC like us, if an order comes in the door, we don't turn it down. So we took on a ton of volume. So a lot of our appraisers are still just kind of digging out of getting inundated with 50% or 100% more orders than they're used to. So that and a couple other reasons why we're seeing a few delays. So I would say think about that when you're writing your offers, and feel free to reach out and connect with me directly. I can give you guys almost real-time data on what our average turn times have been for the last 3 months, or more importantly, for the last month, like in a specific county. So Oakland County, Michigan, normally, the last 6 months, usually we're 5.2 business days. The last month we've been 6.3 business days. So in a lot of areas where it's 5, 6, 7 days to get an appraisal done, maybe tack on a day or two buffer in there to make sure that we have those things covered. And then these three items here that you'll be kind of sharing, these are really, really helpful. So this is the guidance that Fannie Mae, Freddie Mac, and FHFA got together last week, and they put these out on Monday. They'll probably be revising some of these things, but these are kind of important to see. In fact, if you don't mind, I'll share my screen for a minute just so you guys have, let me see here. I'm going to do share screen. I'm going to share screen 3. Okay. You guys see this screen okay? And I'll be somewhat brief on this, but this is the guidance that Fannie Mae sent out for lenders and for real estate appraisers. And this is Fannie Mae's version. This is Freddie Mac's version. They align pretty closely. But the important thing to know is I don't know, hopefully you guys can see this okay. I'll zoom in a tiny bit. This matrix is really important. So especially for real estate agents, this is important because there's more options for purchases right now than there are for refinances. For purchases, if it's a principal residence, and for principal residence, the first priority, the preferred method would be to still go get your regular traditional appraisal that you would normally get. Okay, so that's what we're doing in pretty much every instance. We're still trying to get that full appraisal done where the appraiser goes through the house, the one that you guys are used to. If there's some sort of an issue or an objection that the appraiser can't get access or isn't comfortable, or if the borrower can't get access, or if someone's concerned, or if the borrower doesn't want anyone coming into their home, lenders are allowing them to cascade down to the next version, which is a desktop appraisal. This desktop appraisal that Fannie and Freddie are allowing is essentially the same thing as what you're currently used to, except for it's a 1004 or a 1004 form. It's your regular traditional appraisal, but in this instance, for the desktop appraisal, the appraiser does not leave their home. They don't leave their office, wherever they're doing their reports from, and they need to gather whatever information possible, whatever information is needed to provide a credible report. So they're probably going to be calling either you, the agent, or the borrower, or the homeowner, and asking for as much information. What type of upgrades do you have? Can you send me? The appraiser's going to ask, can you send me some pictures, or can you do a quick FaceTime with me and show me, what the inside of your house, what the inside of the property looks like. This is where you guys having virtual tours is really, really important, because for the time being, now this is temporary until we kind of get through the coronavirus or the COVID-19 crisis, but these are the options. And then it cascades down. The third most desirable thing would be an exterior only appraisal, which would be the appraiser actually would go drive by and put it on what we call the 2055 form. This works for single families. This works for condominiums. This is not FHA. This is only for conventional. So, and then you can kind of see where the rest of the matrix goes, and you can see where it gets a little bit more tricky when you go to refinances. But I'll pause there. Do you guys have any questions on that at all? Anything on that I can help with?
Matt, you got anything?
No, I'm good. That was really helpful.
Okay.
So I don't have anything on that, but I think it's super valuable because I talked to a couple of people in the past day or so, and they, this idea of the appraiser coming in, there was concern over that. So this helps to address it, but it was, I think there's a misconception out there, and I touched on it briefly before, and that misconception is that with air quotes relaxed guidelines for the execution of the appraisal, that inaccurate values are going to come into play. And I don't think that that's the case at all. If anything, I think values might end up a little bit more conservative, which is going to lead to a question that I've got from Sue Russell, who works out of Matt's office, a great agent, Keller Williams agent here in Northern Virginia. But do you anticipate, John, that this is as much magic 8-ball question as it is anything else, right? But do you anticipate there being either a little bit of haircut on values coming, mm-hmm. or any kind of declining markets activity as a result of this kind of thing? I have my own opinion of that, but I'd like to hear yours, and and you can say, dude, I'm not taking a bait on that. That's fine.
No, I'm happy to give my thoughts. It's my personal opinion on it. I don't think I could see the reasonings why people would think that values would soften a little bit. But in reality, if I'm the appraiser on it, like if I'm doing an appraisal for Matt today, I'm not going to put my name and my license on the line on that appraisal report unless I feel totally comfortable that I have all the information that I need. And quite frankly, there's not reason to be, in an appraisal, we're looking for the most supportable value possible. There's a range. We use the 4 comparable sales or the additional listings. We have what those actually sold for, and then we make the adjustments, and more importantly, we use those adjusted prices. being too conservative as an appraiser is a problem. Being too aggressive is a problem. So it's not, you're not safeguarding yourself as an appraiser if you're taking a value and you're saying, I'm going to back this. I know the purchase price is 320, but I'm going to come in at 280 to be a little bit more conservative. That's not a good practice. Fannie Mae and Freddie Mac have a thing called Collateral Underwriter. And it's a really, really impressive portal that every single appraisal that's done for a Fannie or a Freddie loan gets submitted into this portal, and they're building this huge machine of data. And so the lender and the AMCs get back these collateral underwriter reports, and it flags these different codes. Overvaluation code. Hey, and if that happens, the 797 overvaluation code, there's a high likelihood or a possibility that from the data we have, it looks like this appraisal is overvalued. We have the same thing as with undervaluation, and it's not like you would get in more trouble for one or the other. If you were an appraiser and you got put in front of your state board, you would get in just as much trouble for undervaluing a property as opposed to overvaluing. So I think I wouldn't worry as much about that as you guys might think, especially if you as the agent can provide that appraiser with as much data as possible. Here's the opportunity to provide them with everything you possibly can, photos, videos, FaceTime, whatever you can, to give them enough, because at the end of the day, the appraiser has to be able to provide a credible report. And I know if I'm going to inspect the house for Matt and I'm going to walk through it personally with my own eyes and I can take my own pictures and see it and feel it and measure it, I know that I can provide a credible report. I also know, though, that with technology now, you can help give me all the pieces that I need. And if I have any questions, I can ask you. So it's possible you might see, but I also think that right now, things could change and may change, but we are still seeing appraisers getting into houses and being able to go do the inspection. Look, the appraisers are just as worried as the homeowners about being exposed to something. So they're certainly taking precautions. And in most instances, they're reaching out and they're asking some questions, doing some pre-screening. But like I said, we've not seen nearly as many issues with getting access to houses as we thought we may. So.
Mm-hmm.
So you touched on something that I think is super important. It leads into my next question, which is, in a sense you've answered it, but what can agents do to be great partners to appraisers right now? Because I don't know that a lot of agents, a lot of loan officers even know the process that one has to go through to actually become a licensed appraiser. It's not like you sit down and take a 20-minute board exam. If I'm not mistaken, there's an apprentice process. It's not, that's longer than 2 weeks. Oh, by the way, and it may vary state by state, but at a national level, correct me if I'm wrong. As I recall, it's somewhere along the lines of a full year of apprenticeship that has to be in place before you can become a licensed appraiser. Is that accurate?
Yeah, it's a minimum of 13 months. And it's 2,000 hours or 2,500 hours, depending on which level of licensure. But yeah, it's a significant amount of time. I mean, I was fortunate that I did it when I was young and I was just in college or getting out of college. So I wasn't leaving a career where I was making a lot of money to try and make that leap. But yeah, it's ironic. The threshold to become a real estate appraiser versus a real estate agent versus a loan officer or a mortgage wholesale account executive, by far the hardest to get licensed or certified is the appraiser.
Yep.
And you can make good money as an appraiser, and a lot of them make really good money, but it's transactional. It's each order you're essentially getting the same range. It's not like you're making thousands on those deals. You have to do a lot of them to be able to make good money.
So that being said, in this kind of time, I mean, I always, when there's a, that guy doesn't know what he's doing, I always kind of, pick up the shield and like, hey, he's up there, cowboy. But what can an agent do to be a great partner to, because at the end of the day, everybody actually has the same desired outcome, right? Which is for the deal to close successfully as a result of all the different moving parts. It's no matter what anybody says, the marketing is fantastic. They're a good technology company, but you can't just press the button and get the money.
My best advice, I have a lot of really close friends. We're in a little town here that I live in, a suburb of Detroit. It's a nice, there's a lot of really good boutique, real estate shops. And the advice I'm active. I'm involved with Women's Council of Realtors and a couple other groups, and I speak to them pretty regularly. The best advice I can give is setting proper expectations. And listing the house right the first time. So I would make a really good habit and if you have a local friend who's an appraiser, pick their brain. Or if you want to call me and pick my brain, I'm happy to do it. When you go to list that property, you guys obviously know this because it's your business and it's what you do. But if you list too high to begin with, the property goes stale, and it's very, very difficult to bring it down. If you list it right out of the gate, you can, or even if you list it a little bit lower than where you maybe were going to, you can create buzz, and it's approached totally different in the marketplace in terms of the perception of that property. But I would, especially with having to rely on financing nowadays, it'd be a totally different game. It'd be a totally different story if borrowers were just coming with a checkbook or a lump of cash and just buy the house, but they aren't really the ones putting up the risk on the property. It's the lender, and the lender needs collateral. So the best advice I can give is pull those comps beforehand. So don't pull the listings. Go and so essentially think about it this way. When I go to appraise a house, I'm going into that house. So I'm going to go into Matt's house, and I'm going to figure out what the characteristics are, how old it is, what the condition is. And I'm going to find, hopefully within a mile, but definitely within the market, within the same market, I'm going to find 6 to 8, and then I'm going to narrow that down to 3 or 4 sales that have taken place definitely in the last year, hopefully in the last 6 months, that are the most similar. So if I was going to buy, if I'm interested in Matt's house, what other houses that have sold would I have been interested in? If it's 2,600 square feet, you're going to search 2,300 to 2,900, maybe 2,950. You want to be apples to apples as possible. Basements with basements. Don't try and find comps that are on a slab. Try and find those similar houses and use that as a basis of comparison. So if the borrower really thinks, if the homeowner really thinks, hey, house is worth $375 all day long, but all the sold comps are telling you that it's $340. You got to have that realistic conversation with them so that you're prepared for that. And like I said, the other thing is right now, especially with where we are, this is a good thing to do for the future. If you're not doing it already, have an online presence, have the ability. Right now, you guys can sell houses remote without, if you have a really, really good, good technology, really good camera setup where you're getting a full virtual tour and good photos of the house to really present it well online.
Yeah, and we're doing that a lot. I mean, that's one of our big focuses right now is that online presence. We're finding on some of the listings we're putting up, and we're getting offers before they actually go to the market, or before people actually see the property, because we're able to give them the full experience from their phone, from their desk. And so just sitting here listening, it definitely seems as though that piece that we've added in right in this environment will be such a useful piece for appraisers as well, and potentially just knock out some of the problems that we're talking about, people not wanting to go in each other's homes, sellers not wanting to have extra people in their homes. We can do so much of this now virtually.
Another piece that's important that, if I can say this, think about frustrations that I had as an appraiser. If as accurate of measurements or accurate as square footage, gross living area as you can possibly get, the better. I can't tell you how often I would see, I would look at the public records for a house and it would say, 1874 is what the township or the city has for the house, 1874. And then, per the agent, it was 1,900 square feet they had it at, or they had it at 2,000. They would round up. And I would see that often. If you have the ability to come up with a really accurate gross living area or square footage, it's helpful, because you got to realize those sales, each sale that you guys have. So when Matt sells a house, it becomes a comp. That's going to be a comp for another house that Matt or one of you guys is going to try and sell. And so if you, even if, what always frustrated me is if an agent had a house that was priced to sell, and they, even if it was in good shape, but they knew that, hey, we're gonna price this to sell because it's a motivated seller. And so they would, sometimes I would see, it doesn't happen as much anymore, but agent would put, very limited, they would only put a couple pictures or in some limited comments. the more information that you can provide about the house, the more helpful it is, not only for you to get buyers in the door, but also for you to get for when the house is appraised and those are comps, the more information the appraiser has about that comparable sale, the more credible report they can put together.
And that's where a lot of the 3D, we've added a 3D portion to every single one of our listings. And it's
huge.
Every measurement's on there, every countertop, every bathroom, everything. There's a full diagram. So again, just something to provide a little bit more value for everybody, right? And make this a lot easier.
Yeah, and I would say, and this is a shameless plug, but you know, I've been at this for a long time. Like I said, we work with, you know, I kind of have to be Switzerland on who we promote or who we talk about, but we work with, you know, big banks, credit unions, small local banks, you know, independent mortgage, non-bank lenders, retail lenders, and, you know, wholesale lenders, the broker community, you know, like what Rich does. It's just, there's so many more options. I get for certain things, you know, maybe for jumbos, maybe for certain niche products, there might be a bank or credit union that's better, but an independent mortgage broker, Rich has 12, 15, he has so many different options that the broker can use. So, you know, giving good guidance to your borrower to be able to help them close, not painting them into a box that, hey, no offense to Chase or anyone like that, but if it's like, hey, well, you know, go to Chase, you have their rate sheet and that's it. Rich can go shop around and find you the best deal, and you know that's really important for you to be able to add value to that borrower.
Sure, totally agree.
Appreciate that. I think I've gotten through I think every question that I had from offline and online. You know, the one last thing that I had, and this matters. This is gonna, I would say it matters. There's the classic thing in that, you know, when you go into Facebook groups and you get a bunch of loan officers together, they're like, well, yeah, but my market, you know, it's like, well, everybody's market is whatever, right? So, but my market here in the DC area, in anybody who's in Los Angeles or in San Francisco or in Seattle or in New York City, you're all hyper competitive too. So I get it. We have a number of really, really good, high quality regional or local correspondent lenders that we compete with, and they're fantastic. They're really well run companies, but a lot of times they'll set up what is known as an appraisal, a panel of appraisers, and kind of run their own AMC versus an AMC, which is that in definition. Can you explain the difference between those? I get it from my point of view, but you know, for Matt, and Matt should have more than one relationship, and he does. But you know, if he talks to somebody at First Savings or at Atlantic Coast or wherever, they'll run through a panel of appraisers, which is round robin, as opposed to me. I'm going to work with you guys, or you know, a different AMC. Can you kind of describe the difference of that? And if it's too much in the weeds and people don't care, that's fine. I'm curious.
Yeah, I'll keep it as high level as I can. Yeah, so when after the fallout in 2009 happened, so Dodd-Frank Act went into place, HVCC, which has changed in some different iterations, but essentially, you know, they needed to provide independence for appraisers where they felt like they were getting, where they could provide, you know, the appraiser's job is to provide their professional opinion of value. They're the expert at that, in that specific field, just like Rich is the expert, you know, in his field, and Matt's the expert in his field. And as you guys know, not to have too much revisionist history, but the problem was it was skewed when the loan originator would call me as the appraiser directly and say, hey, look, you know, I know this one's probably worth 215, but we really need 225 or 228 to make the loan work. That created a lot of problems. So, you know, we've gotten away from that. But you know, it's sorry, what was it? Give me your that portion of the question really quick. I lost my thought there.
So the difference between an AMC and a local panel.
Sorry. So the panels, so there's options. So there's two options for the lender. The only time that the lender can directly engage the appraiser is for VA. And that's commonplace. That's normal. That's what they do. They don't use any other process, but they have a panel of VA appraisers. Outside of that, though, lender has two options. They can utilize AMCs, which is a third party like us, and our job is to manage the process. In most cases, lenders, whether it's banks or lenders or credit unions, if they use AMCs, which the majority of them probably do, it's not just one. They'll have multiple options. They'll have 3, 4, sometimes some lenders have 20. It doesn't make a lot of sense. But the other option is to manage your own panel, have an internally managed panel. And yeah, you certainly see that the local savings and loans and some of the bigger banks have that. I will tell you, and there's certainly some advantages to that. I think there's inherently more risk if that's not managed properly, and so a lot of the larger banks have gotten away from that. Even owning their own AMCs, they've gotten away from. Chase used to own their own AMC. Wells used to own their own AMC. I'm sorry, Chase did not. Wells did, and Bank of America did. They both sold those and got away from that because there was too much risk, too much exposure. The managed panel, if it's managed properly in a compliant manner, that works well for those lenders. And the way that works is there is someone who's not part of production who works for that lender, whose job, and oftentimes they have a group or a team, and it's an appraisal desk, and they have to manage those relationships with those appraisers. And in a lot of those cases, those appraisers, a lot of times they get paid more. So appraisers do like working directly for some of those local banks where they can be on a panel. There is more risk there. I can tell you when auditors and when regulators come in, they do look at that situation more carefully, because there's not an outside third party that's managing and making sure that you're staying compliant. There's no, there's more of an opportunity when we get an order. So when Rich is doing a loan that's going to UWM, he places the order, it comes to class. We totally in a vacuum go find the right appraiser for that property. And in theory, the first time that Rich knows who that appraiser is when we deliver that report back to him. Okay. The problem from a regulation standpoint, and the risk concern is with the panels, is that, hey, if there's only 10 appraisers or 8 appraisers that cover, Oakland County, Michigan, in theory, a loan originator could pick up the phone, and he knows after a while who those people are on that panel, and there's opportunity for that to be tainted a little bit. But I certainly get it. I mean, I see opportunity or instances where panels work very, very well, and opportunities where they're a disaster and they don't work well. That's the difference. In the broker channel, we cannot build a panel specifically for a broker. We can build a regional panel. If we, as an AMC, work with a retail lender, we can build a compliant panel through a retail branch. But at the end of the day, if we're choosing good appraisers, if we're going through the process and we're using the best appraisers possible, who score out well, who rank well, it should be a comparable process, and it shouldn't be an advantage one way or another.
Perfect. That makes perfect sense. Panels run poorly are a train wreck waiting to happen. So
yeah, exactly.
I've kind of exhausted the questions that I have. I mean, I could go on and on, but at some point, that's just me being me.
Sure.
So everybody gets tired of that at some point. Matt, you got anything else on your mind for John?
No, I'm good. Thank you so much for your time. This was very helpful.
No, thank you guys so much as well. And I will say real quick, if let's see how these next couple of weeks go, because like I said, everything's fluid and things could change quite a bit, and we could have 50% or 60% in a week or two of appraisers that don't want to go out and go through the property, or maybe a lot of them will be taking the option. The lender, at the end of the day, it's guidance from Fannie and Freddie, so the lender has to still make the determination what they're going to allow, what their risk tolerance is. And the other thing is, after we recover and we get through the COVID-19 scare, these will be pulled. It won't be an option anymore. If desktop appraisals or drive-by appraisals were reliable enough from a risk standpoint, they would have gone to those full-time a long time ago. So this is a temporary thing. But if you want me to come back on in a week or two, if the landscape changes a bit and I can give you more updates on that, I'm happy to help anytime. And
sure.
Anybody on or any agency you guys know, feel free, to give them my info and reach out, and I'm happy to help.
Awesome. I mean, I really appreciate it. It means a lot to me that you took time out of your day close to the end of the month when everything is really just starting to get crazy. And oh, by the way, life is just nuts anyway. I'm very, very grateful for that. And props to Izzy for getting herself, downstairs. Super cool. Enjoy it while they're young, man, because they get older and it changes. So
no, we appreciate it. Well, thank you all. Thank you all so much. You guys take care. Next time, if we do it again, set it later in the day and we can start happy hour early, so.
Cool. And
Absolutely.
I close the way open. Go Big Red.
I'll be Fraser, baby.
See you guys. Thank you.
You guys, thanks so much.
See you guys. All right, man. Thank you.
Thanks so much. Let me know anything else I can do, all right?
All right, brother. I appreciate it so much.
All right, cool, man.